Well, it's clearly a big win. And FTSE goes head to head with MSCI in these sort of beauty contests around the world, every month. So for us, the importance is it's a very visible win, and Vanguard is a very, very important client because they influence people, particularly in the US market, and you can see that by the reaction. The US market is a huge market and very important to FTSE. So although a third of FTSE's income comes out of the US today, we think there's enormous growth potential there for us. And it's been a focus of our attention now for the last couple of years. We think the Vanguard deal is really about the hard work we've put in for the US client base over those last few years. And we see it as an opportunity to really build momentum for FTSE in that market. Vanguard, of course, also works all over the world, so we'll get benefits in other markets, but for us, the real benefit is building that client base in the US, and we believe that over the next 3 to 4 years, something like half our revenue will come out of the US. We intend to be a big player there, and this is just the beginning. MSCI Emerging Markets Indices and the FTSE Emerging Market Indices, there are some differences. There are some smaller emerging markets which are included in FTSE that aren't included in MSCI, but the big change is about South Korea. South Korea represents about 15% of the Morgan Stanley Emerging Market Indices, but it's a developed market under FTSE. And FTSE has a record of promoting markets from emerging to developed status, and doing this in a much more structured, rigorous way. And often what happens is FTSE achieves that a year or two before MSCI. And what you have here is South Korea, the 13th largest economy in the world, being recognised as a developed market. That's not the case in MSCI. Whether they follow in a year or two's time, we know it's on the watch list, but why wait to take that cost? The emerging market structure that you have with FTSE, we believe, is superior, and we hope many emerging market fund managers will adopt this benchmark. FTSE's always been focused on the big asset owners. We've just begun to really say we should and can do much better in the ETF market. We're ranked number 8th by index providers in the ETF space, and yet around the world amongst the big asset owners we're number 2. We compete head to head, toe to toe with MSCI. So Vanguard is about ensuring that our position in that ETF space, reflects where we are in terms of the rest of the index business and the rest of the index universe. We move with this deal from being number 8 to number 4, but actually we're now talking to many ETF providers, and we believe by the end of 2013 we'll be number 3, and clearly our plans will be to go beyond that and to challenge for that number 1 and number 2 spot. There's 2 areas. The index world is changing, and it's changing because the investment world's changing. Our clients are more demanding. So in many of the sort of standard approaches to indices, the expectation on index providers are much, much higher. So the quality, the accuracy is being raised to a much higher standard. So that's one area, and what do I mean by that? I mean the accuracy of free float, and we're leading there again in moving away from wide bands to actual free float. The quality of how you classify a country and how you manage the movements of these countries, because that's very important. And important new markets like in the Middle East, they need to come into your emerging portfolio. When do markets such as Korea, which is the third largest economy in the world, why should we treat it as an emerging economy? It's not. So how you treat these things, there's more of a spotlight on the index providers, and therefore that means the quality of what we do has to be raised, and FTSE's leading that standard. The transparency has to be much greater, and the governance structure, making sure all these decisions are made in a very transparent, rule-driven way, avoiding conflicts of interest which exist in our market, is more important than ever before. And FTSE's led in all of these areas. The other area that's exciting is the way indices are being used to provide an alternative to some of the active management strategies. There's no doubt that active managers can add an enormous amount of value, but where they follow just a strategy in the market, whether that's a value-based strategy, a growth-based strategy, these things can be defined. You can passively manage against these active strategies, and you can add more transparency, and therefore you can also do it much cheaper. So your risk is more managed, your costs can be reduced, and that's what FTSE's doing for some of the biggest asset owners all over the world. Now we call these strategy indices, but they're a transparent, rule-based approach to replacing an active strategy so that it can be replicated in a way where risk can be better managed, costs can be reduced. That's what we're doing for the clients. The vision for FTSE hasn't changed. We've always been very ambitious. We've always been very global and international in our approach. We believe we have to service clients all over the world in a very consistent way. I think what has changed is clients' expectations. Clients expect a much higher level of service, and FTSE's been investing to make sure we can do that. Whether you're in New York or San Francisco, whether you're in Beijing or Shanghai or Tokyo, or whether you're in Europe, the level of service that FTSE now provides much higher than ever before, and we believe more and more that index providers are going to compete on the quality of their service and the level of that service for its clients. We think we're going to win that battle.